everybody. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. For those of you new to the channel, do me a favor, click that little subscribe button down below. For those of you not new to the channel, tell somebody else about it. Spread the love. All right, let's go ahead and dive right in. S&P 500 yesterday, we did see that we had rallied in the overnight hours. After our big sell-off on Friday. We'd rallied in the overnight hours on Sunday before the open, but then on Monday morning we hit this pretty big sell-off. We lost about 20 points after that from the open, and so that was a pretty strong drop. We found some stability here in the afternoon times. It really kind of stemmed the tide of dropping, and now just in the last few hours, actually the last hour, have started to see a little bit of strength come back in. Now, what does that mean that I could look for going forward for today? Well, on the 1 hour chart, the best answer I can tell you is not a whole heck of a lot. When I move to the 4 hour, looking at this on a 4 hour time scale, you do have this potential reversal area right here, looking at it on the 4 hour time scale. Now, on the 4 hour time scale, this would then become a potential point where I would look for a candle-to-candle style of reversal if indeed we get it up here. But I don't like that area on the 1 hour chart at all. I really don't. I don't like the fact that we've got a really long wick up here. Now, it pierced above here because this is a retest of this area to the left. So I say, well, what if I go to a 15-minute chart? Well, when I go to a 15-minute, I like it even less because it's the same wick we dropped, and then that area was retested again by this big green candle here before then falling. So I'm not in love with this area, but I do have to recognize on the 4 hour chart that that there is some validity to this level, to this zone. And so in doing so, the best way that I can think about trading it is a candle-to-candle style of reversal coming back down out of here. So keep that in mind as a trade for today. Now, if that's too wide for your risk tolerance, when price gets up to here, if the market's open, which it may not be open at that time, why not look to trade the SPY utilizing, which would be the equivalent of basically, if we opened up in this range up here, trade the SPY, but use the put option of the SPY. Right? So it's the same trade, but then you could trade, maybe one contract to the put option of the SPY, right? So there are other ways to trade it that are not just necessarily using the futures model if it's too wide. Nasdaq, NQ. So we're up a little bit in the NQ this morning, but the Nasdaq has been relatively weaker to the S&P over the last couple of days. And so I've got a potential 15-minute reversal level down here. And how do I know it's 15 minutes? Well, based on the color, right? The color of the lines tell me it's a 15-minute level, which was identified a number of days ago. And it's basically this little bit of basing before this very strong rally in price above this pivot low. So this is where we have a potential to look for a reversal. The way that we are just chopping along sideways here, I would actually be okay if somebody took a breakout from this range, but the breakout from this range does become problematic. And I think there's a good chance that we'll kind of maintain this sideways price action just until our FOMC statement at the very least. Now, remember this about FOMC statements. My rule on breakouts, do not, and the rock means do not trade a breakout on an announcement. And when you trade a breakout on an announcement, oftentimes you get these long wicks one way or the other like this that will, for example, if somebody was trading, let's say somebody was trading this breakout here, all right? So they break out, if it goes long above here, goes short if it goes below there. Well, look at this one candle. This one candle gets you into the trade and then immediately stops you out of the trade, and then we get a little bit of a move. Or it gets you into the trade and then immediately gets you out of the trade and then you get the move. Either way, you fail. And so I don't trade breakouts centered around announcements. I think that's a recipe for disaster. So if the breakout, if you do want to trade a bit of a breakout and you want to take a long above this area, just know that you take a bit more risk, right? You always take a bit more risk. Now, we do have a slight ascending triangle pattern. Remembering that an ascending triangle pattern in the midst of a bigger picture downtrend, it has a much better chance to break out to the downside. So use your own judgment. I will tell you that there's some days that maybe it just makes sense not to force it. I'm still looking at a decent long if price comes back down into here. But on a 4-hour time period, we've definitely established a downward trend in the Nasdaq, right? I've got lower swing lows as well as lower swing highs, and we may get a better opportunity if we do rally to get short right in this region here. So keep this area in mind on the 4-hour. Now, this is similar to the one that we found in the S&P. So we'd have to get a pretty strong rally up in the Nasdaq in order to get a reversal out of this zone. Next would be crude oil. So crude oil yesterday, I believe that we had a pretty decent opportunity for a potential breakout above this area here. Price decided to come in and say, yes, we're going to break out. Here comes the breakout. And then it laughed all the way to the bank. And it is just no breakout has happened. It's been dead. Now, it may not have hit your stop yet because technically your stop wouldn't be until down here. I don't like the fact that we've gotten no movement out of it. So for me, that's a small loss, and I'll take a small loss on a trade like that any day of the week. Or maybe you got in and it moved up a few ticks, and maybe you took some money off the table. Don't know. Everybody's going to have a different trading style. For me, it comes out as a small loss because I wouldn't move my stop quite that quickly. Gold, this was the one that barely gave us that breakout above this blue line here. I still say it's valid if price comes back into it over top of this region. This barely gave us a tick above, not enough really to really lean on, but I'm going to remove it for now. We've got this gap fill area here. Now this gap was a rollover gap. So keep that in mind. It's not the same as a traditional gap if it's a rollover gap between our contracts, but keep that gap area in mind as a potential when price comes down into here. Looking at our bonds, Aussie, Euro, Canadian. So our bond market, we did stay above our potential breakout to the downside. We did not come below that area, and so that area is still valid. We came back up to this little area here and have fallen from that zone, but I didn't have this area marked off, and I'm that doesn't seem like a zone that I would have marked off anyway. Not a whole lot of movement in here for me to lean on. In the Aussie, we've got this upward trend here occurring in the Aussie. I still have this area up here that can act as a bit of a, I'm going to change this to a dashed line because we've already tested it once, and by testing it once, we lower the probability of it working a second time. We do have a slight upward trend. For those of you that want to maybe, ride this trend line, you could maybe possibly look at getting in, now, essentially. And we're in a trend, a little bit of a trend channel, possibly even a rising wedge pattern, which is a little bit more bearish than bullish. Looking at the euro. Now the euro, I do like this area down here a bit better than I do in the Aussie. So I like this area down here a bit better than I like the Aussies area, because this is kind of an area where we see price has reversed here a couple of times. So there could be a bit of a reversion if we come back here again, but I would say it's for a short-term trade, not a longer-term opportunity. And then the Canadian dollar, we've got the areas way down in here. Looking at this on, say, the bigger picture time period, like the 4-hour chart, we have rallied just about back up to the origin of this very strong drop. and that's really where we've started to kind of fall again from. I've got nothing I want to add at the moment because there's nothing in here that I love in that 4-hour time period, although we are in a bit of an upward trend, but our trend momentum is slowing. I'm not going to be trading against that 4-hour trend unless I come to a very strong area where I believe that there's some price imbalance. Great British Pound, Japanese Yen. So we are coming close to our yen entry as we have this little area here, but I'm not a big fan of the way it's basing above the area. So take your own risk tolerance into account as we come into this region. If we base in here, if we base a few more candles, I'm going to cancel that trade. I don't really like the basing right in front of the area. The Great British Pound, not quite the same basing. We're rallying into here with a fair amount of strength, but I don't like all these wicks. So just keep those areas in mind. Use your own judgment if you are willing to take it. I still think it's that the pound is a little bit better of an opportunity than the yen at this point. Copper, we broke below our breakdown line, and now it's just chopping along it. So I'm going to remove this line completely. I feel like these areas, they worked out for pretty nice turns and reverses, but I think they've pretty much been used up. So I'm going to remove them at this point. As we're now getting new order flow equilibrium established, and that's what I want. What's the new baseline for equilibrium? And I don't see any good reversal levels on here at the moment. And then nat gas, nothing on here that I want to add. I call this, and I was talking to my friend Eric yesterday, and he called it a rotation day. A rotation day is a great way to call it. I almost call it a flush out day. Days like yesterday and today are days where I don't have a whole lot of trades set out, because what happens is a lot of my levels kind of get flushed out, and I'll have a couple of those days where the market will chop along sideways. I'll take 3 out of 4 trades that are losses, right? I'll take small loss, small loss, small loss, small loss, and it flushes out some of my levels. But I'm okay with that, because what happens is you're going to go in these cycles where you have many, many winners in a row, or a high winning percentage, and then you're going to go in these cycles where your levels get flushed out. And I kind of feel like I'm coming to a flush out level in a number of these trades. And I think a lot of it is due to the upcoming Fed announcements. So just keep that in mind, right? I love the analogy for those of you that watch baseball. I'm a big baseball guy. And those of you that don't watch baseball because maybe you're not in the U.S., the national pastime here. Well, at least we still think it's our national pastime. But it's a game of, where the best hitters in the world get on base 4 out of 10 times, right? The absolute best get on base 4 out of 10 times. But what happens is sometimes they'll get really hot, right? And they'll go on a streak where they have a 13-game hitting streak or a 12-game hitting streak. But then maybe they go 0 for 4 the next day. And that's kind of what I think about in my trades. I'm never going to hit 80 trades in a row, 40 trades in a row, 20 trades in a row. Heck, I'm hitting 5 or 6 trades in a row is not going to happen all the time. But if I can get 3 out of 4, 4 out of 5, 3 out of 5, 6 out of 8 for a while, and then I'm 0 for 2 or 0 for 3, I'm okay with that, and it'll flush out the levels. But the consistency and doing it over time is really what matters. So keep that in mind. That's our lesson for the day. All right, everybody, I hope you have a great trading day. If you need something, please feel free to reach out. Chuck at iiefinancial.com. I will see you all soon.